Julian, welcome. Listen, Jim, Kramer calling this basically the moves insane. I don't think he's saying that they're unjustified. He's just saying I've really never seen anything like this in his career. That's saying something considering it's a 40-plus year career. What do you think of these moves? I mean, are they getting out of hand or are they deserved?
Well, first off, Jim was maybe using a little bit of hyperbole because he certainly did see these moves in 1999 and 2000, as we did as well. But when you have, trillion-dollar companies moving 5, 6, 7, 8% in one day, that is really shows that there's a bit of froth in the market. And, from our point of view, this is one of these times where, as a long-term investor, you want to use this strength and maybe reallocate a little bit away from these stocks, which probably in the average investor's portfolio have become a disproportionate amount of exposure.
So in other words, if you made some money on them, sell a little bit, don't dump your entire position, take a little profit. You never go broke, taking profit, as they say, and then put it where?
We think healthcare is very, very interesting here. For the most part, healthcare is trading at an historic discount to the rest of the market simply because we think investors are sort of reliving the 2016 election, where healthcare was under pressure the entire year due to the potential initiatives of what would have been the Clinton administration. We think that regardless of the outcome of the presidential election, healthcare has become a strategic imperative industry for the United States. Clearly, the virus has made it so. Rather than a place to be attacked constantly. So while there is likely to be reform, the market has totally over-discounted the potential effects of that reform.
Yeah, and healthcare, I think, is about 1/5 or 1/6 of the entire American economy. I mean, in some ways, it is the economy of a number of states. So, Julian, specifically within healthcare, what looks attractive?
Well, so what's interesting to us is again, in a market where, momentum has been incredibly strong and perhaps with respect to the technology stocks, too strong, we would say in a low-yield environment, some of these large-cap pharma companies, particularly those that are involved in thinking about the virus and vaccine and so on, with good solid yields and good dividends and earnings are really the places to rotate to. It's almost as if it's a substitute for bond exposure, really.
What if big tech just keeps going up? I mean, and because valuations don't matter, they're in all the ETFs, people are just passively investing. They don't care if it's 24, 27 times earnings. They just put their money passively into an ETF. They own all the same stocks, and they keep going up. Is that possible, Julian?
It certainly happened for an extended amount of time, as I said earlier, in 99 and 2000. But to think that the phrase "it's different this time" is really true has been, where investors have made, serious mistakes. Look, tech is a bigger proportion than it was in 2000, but, you had to suffer some pain for several years to get to where you are.